market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Fred in Denver. Hey, Fred, what's going on?
Hey, Tom, listen, it's an honor to speak to you. I wanted to tell you, I'm one of your successful tigers, and the reason that I'm successful, I probably read a couple hundred books on technical analysis over the last 10 or 15 years. I'm a retired public school teacher, and I heard you talking today on your earlier show that if you really knew what you were doing in this business, you probably wouldn't have to work again. And I wake up every morning, I look at your book, I can tell you, every other author is just pales in comparison to your clarity. I just wanted to thank you.
Oh, I really appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. I hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Create new agreements based on respect and love. Take responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement. Create a new one. Use your imagination and explore all the possibilities. Bottom line, folks, you can make any type of agreement you want. Just make it work. Market-wise, let's take a look at it out here. We had the Dow Industrials up 52, NASDAQ down 6, S&P's up 1.5. We had the gold contract down 280, trading out at $1,731 an ounce. Silver up 51 cents at $32.89 an ounce. Platinum up 450 at $1,525 an ounce. Copper down 4 pennies at $3.56 a pound. Light sweet crude flat at $100.97 a barrel. Bonds off 20 ticks at 140.29. Dollar index off 3 ticks at 78.63. Euro down 1 at 134 flat, and the yen off 9 ticks at 77.73. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we get to a price point today of 1266.03. High yesterday was 1266.73. The prior day was 1260.08. You're going into the November 8th, which was the 1277, as well as the 1275. Now, what are we doing with? Well, today, folks, you had a whopping 707 million. The 707 million are going into 1.4 billion, which was the 27th. Not even close. Just, it's hanging up here, but it can't get the conviction and can't get the buyers behind it to launch the baby. That's your S&P. We look at the Dow Industrials, what we have with the Dow, same type of setup. Now, they get the top line number in the Dow. They've gotten it up. You know, closed up only 52 today. That baby had got up to 12,215. You know, gave up 75 points into the close. Same setup. Now, the high of the 27th is 12,284. We got to 12,215. You know, can the 12,000, yeah, I mean, it can get tagged in a heartbeat. That's the bottom line. Is the juice there? No, it's not there. In fact, we got over the 12,187, which was November 8th. We got over the November 9th level. We got over the November 11th level. We got over the November 14th level. And we got over the November 15th level. All failures. Every single one of them. Bottom line, that's telling me flat out that, number one, it can test it. But number two, when you're pushing highs and now the volume contracted by 700 million, there's no way that you're going to basically get over this 12,284 level, which was the high that was generated on the 27th of October. The NASDAQ composite. We go over to the composite. This is what we have with the composite. Now, the composite can't get traction, period. The composite today, sideways move, you know, but we have a sideways move at 1.4 billion versus 2.8 billion. NASDAQ just can't get out of its way. The high on the NASDAQ is 27.53. Right now, we're out there at 26.49. Let's go to the bonds next. We take a look at bonds. And bonds, we're dealing now with the March contract out in 2012. Okay, so what do bonds do today? We go down 20 ticks. We have 241,000 contracts. The 241 is coming into 478,000 contracts. This is building cause to get into the 146.15 mark, and we'll see what it does when it gets up there. King dollar. Let's go look at the king dollar. They try to jam it down again. You know what? It's like the ever-ready battery. It just keeps coming back. King dollar out here today, really flat market. It gets to a price to 78.97. Hangs out there at 78.35. Bottom line, that's building cause to get into the 79.80 mark. I suspect what we're going to do is that we're going to run up somewhere into the 82.50 mark. Gold, what we did with the gold contract out here today, she made her way back. She had a low out there, 17.03, made her way back to the, let me see, CGC. It's amazing. We're out at 2012. This is just amazing all around. There she is. Okay. What gold did, we did 122,000 contracts. We got down to 17.05. That little baby was going into 187,000. Rejected lower price. You're still in that consolidation. The way gold is setting up, though, even the equities, they're having a hard time getting through the September downdraft. And the volume characteristic is dramatic. It's from 32 to 40% lighter. So that's telling me that the dollar's going to win out on this run topside. Let's go to our man David in Clearwater. David, what's going on?
Hey, Tom, how you doing today, my friend?
Doing great. You having a good day on that nice summer day that we have? Isn't it bizarre?
So bizarre, man. Are you kidding? I love it,
it's
bro.
Awesome.
I love
it
it.
Is. Folks, it's the summer down here today. It's like 78 degrees. It's pretty amazing.
Okay, 78 degrees, blue skies, a little bit of clouds, but mostly blue skies, man. Just another beautiful day in Florida. What can I tell you? I love it.
That's a beautiful thing. That's right, man.
No doubt about it. Hey, listen, Tom, unfortunately I had to jump in my car here, so I'm going to take your advice that you give me in the past. I'm not trying to read this chart as I'm driving 70 miles an hour across I-275. I was wondering if you would be a gentleman, please, sir, and put the NQs on an hourly, take it back about 3-4 days.
Okay, let's see. So I'll do 7 days, and we'll do 60 minutes. Okay, I have it.
It seems like in the last 3 days especially, we've been in consolidating, and every time it tries to hit the approximate 23.45 and change, it goes up, hits it, comes back down. Looks like yesterday had a decent surge on the way up. In the morning, comes down on heavier volume. Today it goes up on vapor, comes down on heavier volume. And then around 3 o'clock or so, when I was catching on the ticket,
yes,
the finance, I guess they increased the loan facility that the broke countries in Europe are going to bail out from. Euro surges on it. NASDAQ goes higher as a result. But then in the last, like the last hour of trading here, it comes down on significantly heavier volume. Would that constitute failure or close to failure, or what are your thoughts?
Okay, so we're looking at the NASDAQ futures, folks, and what you have is this, is that the actual, let's see, we did 212,000 contracts. You're going against, we're going against 363,000. We get to 2341. Yeah, good. Yeah, absolutely. This is what it did. November 17th, right? The high of November 17th is 2332.75. We get to 2341. You close underneath it, and you close underneath it by, 14 NASDAQ points. And we close underneath it by 140,000 contracts. Yeah, that's beautiful, man.
I actually read it right.
Yeah. What does happen, and this is where, folks, this is what makes a market, well, bulls and bears. When you do hanging highs like these, okay, it's the danger for bears is that, okay, man, this thing's going to come in, it's going to come in big, okay? The danger for bulls, they're just sitting there saying, oh, come on, you got to come in, you got to come in. What I've seen, though, bottom line, is that when you get up to these levels and the volume dies on the vine like we're talking, we're talking about really dying on the vine here, too. We're talking about 700, let me see what we get after the close. Okay, we got 801 million right now. That's it. We're done. Yeah, it's up past 10 past 4. You're going into 1.4. So that's telling me that the dollar's going to win out here. The dollar wants to go higher. Euro wants to go lower. that correlation flat out brings the market lower.
And also, I'm sorry, John, go ahead.
No, go ahead.
Also within the consolidate, going back to the NQs for a brief moment, I mean, it looked like failure at the swing point for sure, but just within the consolidation itself, to use your terminology, the force always seems to be down. So would that tell you, since when it comes down, it's coming down on heavier volume than what's going up, does that tell Tom O'Brien that the probability, I realize it's a game of probabilities, but does that tell you that the probabilities are this consolidation on the NDX 100 is going to break lower, not higher?
That tells me that the longer term is lower, but what does happen is that it doesn't mean it can't go spike that 2400.
Okay.
The biggest, this is, folks, you know, what is really cool here is this. What you hear in the conversation between Dave and myself goes like this. When you're approaching, first off, swing points, whether they're highs or lows, how you approach them, I've found, gives you great information. And the great information, flat out, that I would say that we have right now is that you are approaching them on dramatically lighter volume, so that's telling me immediately that you want to go downtown, okay? So that's the first part you're hearing off me, okay? Now, let me tell you the second part. Now, this is where the second part, it's not subjective, but what it is that I've seen this in markets. If we are going to go downtown, and we're going to go downtown on a monster way, right? What markets love to do before they do that is go up and spike the high, intraday, get everyone absolutely flipped out, and then let loose, and they'll never turn back. And that is the larger move, which I'm explaining it to you because you want to be aware of that, Dave. Do you follow me?
Yeah. Yeah.
So it gets intriguing, okay? Because what happens is that when you're in the middle of a trade like that, folks, you're literally, what has helped me tremendously is this, is that when I only did price, which is, the early 90s, they'd get me out of a trade in a second. Because what happened is that, the price is going, oh man, we're going to the moon. Oh, we're going to hell in a handbag, okay, either way. But when you put the volume together with it, if it's that dramatically off, it's like, oh no, hold it, let me see if it can hold. And, you can go back to 94, you can look at it, you can go back to 98, you can look at it, you can go back to 2007 and look at it. And you'll see those numbers there before the market fell apart, bang, they spiked the high, and then see you don't want to be you, In this case, it looks to me that we won't spike this high, but I wanted to just lay that scenario out for you so you can be ready for it.
Along the lines of the exchange traded fund QID, where would you set your stop in anticipation of it maybe spiking so that you don't get stopped out in that scenario?
No, don't worry about getting stopped out. I wouldn't worry about it. You stay right there. We're going to be right back.
Thanks, Tom.